Hey everyone, welcome back to Corporate Dakota, the place where we try to make sense of the crazy world of business and finance. And today we're diving deep into a report from an ETF that is all about India's booming internet scene. Get ready because we're about to decode the INQQ, the India Internet ETF's latest shareholder report. This is where we see if this fund is really giving us a front row seat to India's digital revolution, or if it is just another overhyped tech play. And hey, before we get into the nitty gritty, if you love getting these kinds of breakdowns without all the corporate jargon, make sure you hit that subscribe button and ring the notification bell. Also, we have a fantastic community over on Discord where we discuss these filings and more. The link is in the description below, so let's jump in and see what is happening with the INQQ fund. Alright, so we're looking at the annual shareholder report for the INQQ, the India Internet ETF. Think of this as a yearly checkup for the fund, telling us how it did from the 1st of September 2024 to the 31st of August 2025. The main goal of this fund is simply to mirror the performance of the India Internet Index. Let's get into what the fund is actually invested in. We're seeing sector weightings here. It looks like financials are the biggest slice of the pie at 34.3%, followed closely by consumer discretionary at 31.2%. That means the fund is heavily betting on these two areas of the Indian economy. There is also a decent chunk in communication services at 10.6% and energy at 7.4%, then smaller pieces in consumer staples, industrials, and information technology. This tells us they're focused on areas that are seeing a lot of digital adoption and growth in India. Now, for the really interesting part, the top 10 holdings. This is where we see the big players. Eternal is the largest holding at 9.0%. Then we have Reliance Industries at 7.4%, Bajaj Finance at 7.0%, and Geo Financial Services at 6.9%, 197 Communications and PB Fintech are tied at 5.9%. Swiggy and MakeMeTrip are next at 5.4%. FSN E-commerce Ventures makes up 5.0%, and InfoEdge India rounds out the top 10 at 4.6%. These are the companies that are really driving the fund's performance. It is a mix of established giants and rapidly growing tech companies, all focused on the Indian digital landscape. Let's look at some key stats for the fund as of the 31st of August 2025. The total net assets are about $61.8 million. This isn't a mega fund, but it is a solid size. It holds 26 different companies. Now pay attention to this number. The total advisory fees paid were over $500,000. That is a significant amount. The portfolio turnover rate is 43%. This means that about 43% of the fund's holdings were bought or sold over the year. This indicates they are actively managing the portfolio, perhaps making adjustments based on market conditions or index changes. Now, how did this fund actually perform? They say for the fiscal year ended the 31st of August 2025, the fund had a total return of negative 0.40% at net asset value. That means it actually lost a little bit of money on paper. They explain this by saying India broadly underperformed other emerging markets during that period, even though it had done really well the year before. But here is a key point they make. The fund managed to do better than its core benchmark, the MSI India Index, which had a negative return of 9.64%. So even though the fund lost money, it lost less money than the broader Indian market index. And that is largely thanks to the growth in Indian internet companies. Let's look at the longer term performance since the fund started in April 2022. A hypothetical $10,000 investment in the India Internet ETF has grown to about $9,928 by August 2025. That is a slight loss overall. The India Internet Index itself did a bit better, growing to $10,852. The MSCI India Index, however, did much better, growing to $12,315. So while the fund outperformed its own index and the broader Indian market index as they claimed for the last year over its entire life since inception, it has underperformed the MSCI India Index. Scroll what were the fund costs for the last year. Scaled what about the costs for a $10,000 investment. The cost for the INQQ, the India Internet ETF for the last year were $86. That comes out to 0.86% of the investment, which seems pretty typical for an ETF like this. This is the expense ratio that eats into your returns. Scroll statement of assets and liabilities scaled. Let's dig into the financial statements. The statement of assets and liabilities as of the 31st of August 2025 shows us the fund's financial snapshot. Their investments at cost were around $53.8 million, but their value at fair value was higher at about $62.4 million. This difference is the unrealized gain at that point. Total assets were over $62.5 million. On the liability side, advisory fees payable were about $46,000. Accrued foreign capital gains tax on appreciated securities was a much larger item, at over $663,000. Overall, total liabilities were around $710,000. This leaves net assets at a healthy $61.8 million. Scroll statement of operations scaled looking at the statement of operations for the year ended the 31st of August 2025. We see income and expenses. Dividend income was about $276,000 and interest income was nearly $10,000 after deducting foreign taxes withheld. Total investment income was $227,000, but then we have expenses. The advisory fees alone were over $501,000. So net investment income loss was a negative $274,000. Then we have realized and unrealized gains and losses. Net realized gain was about $90,000. However, the net change in unrealized appreciation, which is basically the change in the value of investments that they haven't sold yet, was a negative $17,000. The total net decrease in net assets resulting from operations was a loss of about $201,000. This aligns with the negative return we saw earlier. Scroll notes to financial statements scaled. The notes to financial statements are where we get the details behind the numbers. Under significant accounting policies, we see the fund values its investments at fair value. For securities traded on exchanges, they use the last quoted sale price. If a market price isn't available, they use other valuation methods. They also explain that the fund aims to qualify as a regulated investment company for tax purposes, meaning they generally don't pay federal income taxes directly. They also mention foreign taxes, noting that the fund might be subject to taxes in countries where it invests. For example, they accrue a deferred tax liability for unrealized gains in India. Foreign currency translation is also detailed, explaining how they handle investments made in currencies other than the US dollar. Scroll report of independent registered public accounting firm. Scaled here is the report of independent registered public accounting firm. Cohen and Company Limited has audited the financial statements. They gave their opinion that the financial statements present fairly, in all material respects, the financial position of the fund. They also mention they've been auditing investment companies advised by Exchange Traded Concepts LLC since 2012. This provides some assurance that the numbers are indeed accurate. Scaled notice to shareholders. This notice to shareholders is important for tax purposes. It breaks down the distributions paid out during the year. For the fiscal year ended the 31st of August 2025, they report 0% as long-term capital gain distributions. 100% of the distributions were ordinary income distributions. They also mention qualifying dividend income at 15.78% and qualifying interest income at 0.24%. Notably, they report qualifying foreign taxes at 46.83%. This gives investors a heads up on how their distributions will be taxed. Scroll disclosure of proxy voting policies and procedures for closed-end management investment companies is scaled. Now, there are sections here about things like proxy voting policies and director remuneration, but for an open-end fund like this ETF, a lot of that isn't directly applicable in the same way as it is for closed-end funds. They do mention that all fund expenses, including trustee compensation, are paid by the investment advisor. Scroll controls and procedures scaled. The report also touches on controls and procedures. Essentially, the company's top executives have confirmed that their internal controls and procedures for financial reporting are effective. This means they have systems in place to make sure the company's financial information is accurate and reliable. There were no changes in these controls that significantly impacted their financial reporting during the period. Scroll signatures scaled. Finally, we have the signatures. Richard Malinowski, the Principal Executive Officer, and Christopher W. Rollcake, the Principal Financial Officer, have signed off on this report. This shows they are taking responsibility for the accuracy of the information presented. So, what is my take on all of this for the India Internet ETF? On the positive side, the fund is positioned in a very high growth area, India's internet sector, and it did manage to outperform its direct benchmark over the past year, which is commendable. The fact that its top holdings are major players in the Indian digital economy suggests a solid strategy in place. Also, the auditor issuing a clean opinion gives us confidence in the financial reporting. However, there are a few things to consider. The fund has had a slight negative return since its inception in April 2022. And it has underperformed the broader MSCI India index over its lifetime. While they've managed to do better than some benchmarks more recently, the overall performance still shows some room for improvement. The advisory fees, while standard for an ETF, do eat into returns, and the fund's assets under management are not massive. The significant accrued foreign capital gains tax also highlights the complexities and costs of investing in emerging markets like India. In terms of direction, the fund is clearly focused on digital growth in India, which is a powerful trend. The major risks, as outlined in the report, include currency fluctuations. The general risks of investing in emerging markets like India, limited liquidity in certain situations, and market risk. Essentially, if India's economy or its internet sector faces headwinds, this fund will feel it. My conclusion is that the INQQ, the India Internet ETF, is a play on a very specific and high-growth theme. It is not for the faint of heart, and it is important to understand the risks associated with emerging markets and the technology sector within them. While the fund has shown some ability to navigate these complexities, investors should be aware of its performance relative to broader market indices and the associated costs. It is a concentrated bet on India's digital future. Alright, that is our deep dive into the INQQ, the India Internet ETF's latest annual report. What are your thoughts on this fund and its holdings? Do you think India's internet boom is sustainable? Let me know in the comments below if you found this breakdown helpful. Please give this video a thumbs up and subscribe for more corporate investigations. And don't forget to join our Discord community for even more insights. Thanks for watching Corporate Decoder, and we'll see you in the next video.